Good morning, everybody, and a very, very warm welcome from me. My name is Neil Pryor, and I commonly go by the call sign of NVP, my initials, at all the big Forex forums, global forums. It's a very special day today, so I thought I'd record a very quick video because technically today at the end of tonight, 11 p.m. or whatever, 11:59 p.m., we will technically leave Europe, the first phase of our extraction from the European process. And it does commemorate something that's lasted, I think, over 4 years now, 3-4 years, whatever, commemorating an amazing time in the Forex market, the G8, and especially for sterling, GBP, which has experienced severe volatility at times, which has been very, very beneficial to traders. And I know many traders around the globe will support me on that. Sterling in the 7 potential pairs it can trade with, especially USD, cable, and the euro, has been very, very lucrative for us. And I just wanted to record that, give you a very high level heads up on how sterling has moved over the last 3 or 4 years. A little bit of a retrospective, and I'm going to do that very shortly. But first, I just wanted to introduce my website again. It's FXCorrelator.com. If you don't know me by now, then perhaps I'd like to reintroduce myself again. I've been trading since late 1980s. I've actually been gambling since I was a kid. I was brought up in a gambling environment. My grandfather and father were bookmakers. So I've always been around speculation, risk, returns. And I've always done pretty well at it, to be honest. I suppose I was born into it. It's in my blood, in my DNA. So I've always been very comfortable in that environment. I got seriously involved in Forex back in the early 2000s. Late 90s, we had the big bang. We had everything. We managed to finally get platforms at home where we could actually go straight directly into the markets, make money. We weren't having to go through intermediaries or direct intermediaries through phones and other ridiculous things, or sit on giant, I don't know, building size IT platforms to do anything. So it became much more open and accessible to people like myself, day traders. And from then on, I developed my systems. I didn't focus too much on late 1990 indicators, because actually they were designed for stocks. And that's something very important to talk about at some point in the future. Most indicators you see in the market, most indicators people are trying to sell you, have got nothing to do with the Forex market. They were developed for stocks, for indices, which obviously came through back in 70s, 80s, and so on, or earlier than that indeed. So they're not relevant. Well, some of them are. Some of the basics are. I suppose the moving averages will always be relevant for any particular market or trading area indice, but I was much more interested in things that were bespoke for Forex, and I use them, and I like to think I use them very well. The FXCorrelator, which is an indicator, free and available, is one such currency which looks at the relative strengths of the 8 major currencies and gives you information and feedback as to how to trade them accordingly. This is available here. If you go to my free links and systems, you'll see many, many things to do with the FX correlator and related derivative indicators there. There's also a tab here, which is called the FX correlator. You go on that, you can load it, you can do some work with it, you can do what you want with it. I don't give huge amounts of instruction on it because, to be honest, I think that it's something that people need to work on themselves. But if you come to here and to the website, or sorry, to my forums, the Forex forums, where I'm very, very vocal and active, you can get a bit of an insight into what I do. So, for example, I've been at Forex Factory, which is what this is, by the way. I've been at Forex Factory since, I can't even remember now, to be honest with you, since 2007, 8, I can't remember. Which was a kind of forum. There's quite a good forum. Got some good calendars on there, etc., etc. But I use that a lot. But my primary one actually is here at Trade to Win. I joined Trade to Win. It was quite a friendly thing. I think I joined that back in the 2004, something like that. I'd already been trading my system for 2 or 3 years by then. And I think about 2009, I got into sharing information on this particular thread. I think this thread is now, I know it's classified as a best thread, but I think I've had about 2.5, 2.6, 2.7 million views over the years. Thousands of downloads. You can see here, if you actually go to Trade to Win and go to my thread correlation trading. I'm MVP, by the way, so as I say, that's where I'm known. I'm not sure what legendary member means. Hopefully that's good. And as I post, there's always lots of links. And you go onto any of these links and you'll again start to see free indicators, free advice, free articles. So anyway, enough of this. Let's talk about sterling and its journey. And for that, I'm going to go to a MetaTrader 4 chart. So I'm going to go into more detail about the top chart. What this is doing is it's actually got 8 colors on here. These lines represent the relative strength and weakness of the major 8 currencies. Hopefully you can see it up here. It's a little bit hidden. Euro, sterling, Aussie dollar, Swissy, Japanese yen, New Zealand dollar, Canadian dollar there in brown, and USD greenback. And what you see at the bottom frame here is my legendary FX indicator currency. What this does is it works off of moving averages. It's not fixed pricing. This is the price of each currency in and around a moving average. If it gets above the dotted white line there, it is moving and proceeding above its moving average. This is set on a 20 default moving average, 20 MA, which is quite a common MA, as most traders will know. If you get the line below the dotted line 0, you're trading below the trend. So the commonality, the very, very basic principle of this is always sell currencies that are below the 0 and buy currencies above. There's a lot more detail to it than that. I can go into hundreds and thousands of systems, but that's the prerequisite. But what I wanted to talk about more importantly, to give you the story of Brexit so far, is the top chart. So I'm going to drag it down. What I did in this, I think it's around the 31st of January 2016, I zeroized all the currencies against the index. So any movement you see in progression from this vertical dotted line is how the prices of each individual currency has moved relative to one another. It's not perfect. This particular system, there's a couple of things in it. It's not absolutely spot on within 0.00%, but it gives you a very good idea of what's happened the last 4 years, yeah? And we go into the middle part of 2016 and then obviously late June, when we had the momentous decision that a very small majority of people decided it was time to leave and walk away from our European friends. And you can see the effect it had on sterling, which wasn't a good one, funnily enough. A massive fall. And as I've commented here, the gap between where sterling is the red line and any line up here gives you an idea at any point what the differential was on that particular currency pair. So, for example, in the early parts, drifting into early 2017, you can see actually that the effect, the actual effect of Brexit was most painful for both sterling, clearly, because people felt that was a bad thing and going to have a major impact, bad impact on our economy and therefore our Forex value. But equally, you could see that dark blue, which represents the euro. Euro was also struggling. Why? Because the divorce of anything inherently impacts both parties ultimately in a bad way. So very, very bad for both of us. So Europe was struggling against some of the other currencies as well. The currency that did the best during that early phase was the yen. That is no surprise. People were fleeing towards safety. And the yen did very well. The yen did extremely well against everything. And I think the point I'm trying to make in this chart over the last 4 years, as we now head towards this momentous evening today, which is now the 31st of January, where we are today, and we're over here, is that during this period, sterling, GBP, this red line, lost between 18 and 25% against all the G7 currencies. So some currencies it didn't diverge against as much as others. And as you can see up here, that 25% was generally around the yen early on. And actually the last year or so, again, yen has had a very, very good period of growth through this period here, 2018, 2019. We took a really bad hit there back into 2019 again, some bad news, bad things happening. And therefore, again, massive, massive divergence. That divergence is up there with the past, some 3-4 years ago. So very, very interesting. And CAD has done well as well, the brown CAD. All the others have tended to pretty much stay now, certainly the last couple of years, stay pretty flat, haven't they? You see that? This is representing where they were from 31st of January 2016, way back at the start there. And really, most currencies have stayed relatively neutral. It's really only recently, the last 2 years, really, CAD and yen have demonstrated extreme bullishness, which is great. So if you've been buying them, well done, guys. Last couple of years, some great moves on them. And clearly, whenever the shit hit the fan, go to sterling, sell it. And you can see here. As we now head into this momentous evening, you can see that sterling is still quite a gap away from everybody here. And the closest is, or the closest index or currency partner at the moment is the Aussie dollar, the little brown Aussie dollar that has been nudging south, going more bullish over probably the last year or so. And we're still about 5% off these opening prices some 3-4 years back. So we're still nowhere near. The other thing I wanted to comment on, again here, if you can see that, back around December 2017, early 2018, we did get pretty close again to the US dollar. Now, while sterling had clawed itself back up here, as you can see, sterling was moving in a quite nice positive trajectory here, so we're doing very well. You can see that US dollar had been having a fairly bad time. I've taken the stuff off the charts as well to make it a little bit cleaner. So there you can see the trajectory down there and a trajectory up here meant that sterling, sterling and cable, or basically cable, which is the name for trading the US dollar, GBP US dollar, that was as close as we got. We got within touching distance there, and I remember that period of trading. So it was a very good pair to trade. Swissy got a little bit close, but some of these guys were never anywhere near. CAD, I suppose the yen got down, but CAD has always kept its distance away from us. So that gave us an idea of whilst we got close there, then what happened, almost like a pivot moment, and off we went down again. If you were following my FX correlator, you would have noticed that there was probably 4 to 5 sell phases where sterling got very, very significantly into the below the zero and diverged significantly. There was a big one, as I commented on, probably back in early 2019. There was one in early 2018. And then clearly there was a couple of absolute massive shunts back in 2016 when the damage was done and then the vote came out. I mean, in terms of growth, you can see up here, I'll just put some markers in. There's clearly been some times when sterling itself has got above this line. And let me just make sterling bold to show this. Okay, that's a little bit better, isn't it? So let's just go through these. There was a period here around early 2017. It came up through here. This was a very strong period through the summer into late 2017. That actually was quite a nice phase there of holding. Let me just bring that down. Yeah, look, this is the period here. Okay. You see, this is off a moving average. The FX correlator moves off moving averages, so it never gives you exact finite movement. It just shows you the trend. Came off again. Another nice period here around early 2019. And if I drag down, that's showing that period there. And then last but not least, another big move here, which is showing you this period. So again, you can see how the FX correlator using a 20 moving average gives you a nice swing here. It's not as easy as it looks, I can assure you, but very powerful across all time frames. This is on a weekly. So just showing you how the FX correlator is reflecting what happened over the last 4 years. So just in conclusion there, a big question everyone asks, and this is what we ask every day. Every day I come to the trading table, every time I day trade, every time I trade the weeklies, the hourlies, what is going to happen next? That is what everybody's always asking. And what do I think is going to happen next for sterling? I don't know. I'm just a humble trader. All I do is I watch what the markets do and I react to them using the patterns and strategies I have. And that's all I need to do. I don't need to be a fortune teller. I just need to be able to react effectively to the market and use strategies that I know work. If I was coming up with any particular predictions, I would probably think around support and resistance and take a look there. Clearly, there's been 2 or 3 touch points here over the last probably couple of years. And I'd be very interested to see if sterling can push through here. This would be very interesting, really getting back up here. And if sterling gets up here, I can assure you 1 or 2 of these guys are going to be getting down. And we'll finally get some parity back to what happened some 4 years ago now. But I don't know. I would be surprised. I don't expect too much to happen this year. I know it's going to be a lot of pain through the year's negotiations, because now clearly we've got to get down to brass tacks and really unpick this mess that's been created. And I can't see that being an upside for sterling personally too much. But what do I know? It might be miraculously wonderful. Boris and his team strike cracking deals and everybody goes home for tea happy. But I'm not convinced. I think that personally we'll probably get a little bit of resistance here. And what you'll see is a push down. You'll see a push down over the next few months into the summer. Clearly, we're going through a time as well where we might need to stimulate the economy as well. So might take some hits off of that. So let's see. If you remember about these things, the currencies are all relative. So whatever sterling is doing, it's being reflected in other currencies. Everything, it's a zero-sum game. That's another way of looking at it. Everything has to add up in terms of net movement. So whatever sterling is doing, it's really being impacted by other currencies. I can see that 1 or a few of these guys might come off. I can't see how the euro is going to get better, to be honest. But we'll just have to see. Each country has its own dramas and its own crisis and its own struggles. And at the moment, the top dogs, and certainly have been for the last few years, the CAD and yen still reign pretty strongly, as you can see over the last few years. But who can tell? Who can tell? It's just about watching the market, trading and reacting to it. Okay, that's enough waffling from me. Let me get back to my trading. Having a good morning this morning on sterling. Let me get back to that. I leave you again with my FXCorrelator.com home site. I'd love to be in touch. I'd love to chat with you. I don't market heavily at all. I haven't really got any courses running at the moment, but I'm happy to mentor, talk to people, help people. I will try and run some courses at some point. But meanwhile, I'm just as happy running my own business consultancy, where I offer people advice on business and more finance-specific things, and also my trading. Every day I'm trading, day trading, a few hours a day. So please feel to join me. Email me at fxcorrelator@gmail.com or leave me messages, join here. I've got a blog here, which I blog every day. So at the moment, what am I up to? Yep, this is my blog today. I'm having a nice morning, as you can see. Some nice pips I picked up earlier on, picked up 20, 25 pips, doing some scalping into early cable. But yeah, I mean, it's all here. Hopefully a lot of learning, hopefully a lot of ideas, certainly give people to talk about. I love talking about using Forex strength meters. Is what I've been doing for 20 years. I'm fairly good at it. I've worked with some of the best programmers in the world. I've actually worked with some of the best traders in the world on some of this stuff, especially Forex. So I've been mentored by many, many great people, and I'm very humble and grateful for that. And I like to think I have some idea what's going on when we apply this particular form of indicator and strategy and style of trading. So by all means, be in touch and have a great day. I'm here at YouTube as well, as people know, and I look forward to speaking to you one day. All the best, guys, and have a great evening. Cheers. Bye.